Say that you are born in a middle class family living in an affluent neighborhood. So you get to see both the sides, the rich side and the not so rich side. How would you react to this? Would you accept your life the way it is, or would you dream of something bigger? Well, that is exactly the story of the person whose life and career you are going to learn in this video. He came from a middle class family, was the most profitable day trader at one time, became a billionaire, and has lived all the ups and downs too. But who is he, and how did he manage to achieve all of this in a single lifetime? Well, it's Steve Cohen, our newest addition to the Legendary Traders series. Born in 1956 in a Jewish family based in New York, Steve had pretty decent upbringing. His parents weren't too rich, but from a small age itself, Steve understood what having money can do. As a high school student, he worked a full-time job and he even got into poker, and it seemed that he was good at it too. And he also credits the game for teaching him to take risks. Steve graduated from Wharton with a degree in economics, and while he was in college, he had already gotten the knack for trading as he had a brokerage account worth of $1,000 that he traded with. Steve would spend most of the time in college playing poker, and he was really successful at it too. There came a time when he was earning more than his family did, and that too just by playing poker. But this did not appeal to him for long, and he wanted to move on from such small casinos and try his hands out in the biggest casino there is. That is the financial markets. Right out of the college, Steve got a job at a brokerage firm on Wall Street that went by the name Gruntal Brokerage. He joined as a junior trader in the options arbitrage department of the firm, and we can pretty much say that his stint at the firm was nothing less than amazing, as he made $4,000 on the very first day and then was logging in daily profits of $100,000. Steve was by far the most profitable trader at the firm and was even heading a group of traders where they were just printing money day in and day out. But then came the financial crisis in 80s, and the firm that Steve worked in shut down. Steve took this as an opportunity to pursue his bigger calling. That was to start a hedge fund of his own, and that's when the SAC Capital was born. In 1992, Steve started the fund with a total of $24 million to manage, and as of 2009, it was reported that the firm managed $14 billion. The fund was a big player in the market at that time, and they were out there taking high risk, high reward trades. At one point, SAC Capital was trading with such high volumes that they were regularly trading 20 million shares a day and were responsible for 2% of the daily trading activity. SAC Capital kept expanding their investment approach, used multiple strategies, traded various products, and had annual returns of 25% for their investors. Steve's main success came during the dot-com bubble burst of the late 1990s and the tech bubble burst in 2000. In both, the firm reported 70% of returns, and in the hedge fund space, these numbers are actually great. The success that Steve saw with his fund was too big to go unnoticed. And then he got the attention of people at a place that every hedge fund manager hated, the SEC. It all started when a portfolio manager at SAC Capital started building a huge unhedged short position in two pharma companies that were working on a drug to cure Alzheimer's. But wait, isn't that a normal trade to play? And nothing seems to be wrong with it, right? You are wrong. The trader got the information that the drug was going to fail, the trials, and this meant that the stock prices of these two companies were going to fall big time. And guess what? The trial result came out bad and the price of these two companies bled. The profits that SAC Capital made on this trade was well over $250 million. And that's $250 million, and that too in a single trade. The authorities looked into this, investigations were made, and it was found out that a crime of insider trading was committed here. Now, for those who don't know what insider trading is, say that you are a hedge fund manager and have billions of dollars to trade. Now, what if Elon Musk calls you up and tells you that they are going to publish Tesla's quarterly results next week and they exceeded expectations by a large margin? You start building long positions in Tesla, and the results are out, the stock shoots up. But wait, isn't that unfair? Yes, it is. You had access to some vital information that general public wasn't aware of, and you used it to your advantage to get a black edge over the others. By the way, Nancy Pelosi is the queen of this black edge, but let's not get into that. What you have done is you have committed insider trading, and according to SEC rule, this is a punishable offense. That particular pharma trade that Steve's firm made was said to be the biggest insider trade ever to be made based on the returns that they generated. The case went on for a couple of years and it was all over the headlines in New York. The firm even pleaded guilty to the charges and paid $1.8 billion in penalties, although till date, Steve never accepted that he was guilty. Steve was even barred to manage outside money as a part of the punishment, but later on he got this overturned and got the permission to allow him to manage outside money. But it was once reported that the authorities were actually targeting Steve and were coming after him with full force. There's even a famous article on this published in 2017 titled "When the Feds Went After the Hedge Fund Legend Steve Cohen." After all of this fiasco, Steve knew that he had to find new ways to generate profits, and this is when he started a venture capital firm, Point72 Ventures, that invested in companies in their early stages. Point72 Ventures is basically the SAC Capital turned into a family office where Steve manages his own money. It is reported that his firm manages around $22 billion. At this new fund, Steve started investing his money in hedge funds that were started by former students of his or former employees of SAC Capital. One such firm was Melvin Capital, which was founded by Gabriel Plotkin. If you had been following the Wall Street bets and the GameStop stock fiasco, then you must have heard about Melvin Capital. Melvin Capital had huge short positions in GameStop, but as we know, retail traders from the Reddit group Wall Street Bets turned the tables around, and Melvin Capital faced massive losses because of this, which led to them losing almost 50% of their capital. Steve Cohen's Point72 Capital and Citadel injected a couple of $1 billion in Melvin Capital to keep it going, and it is reported that this investment hasn't been any profitable for them. Wins do not come without losses, and saw that Steve was no exception. Along with his good investments and trades, he did have several bets where the firm lost money. But then, it's just a part of game, right? Did the losses make him doubt everything that he was doing? Not at all. For these hedge fund guys, losses just acts as a fuel for them to keep going and to find another home run investment for those big returns. Steve knew what damages a loss could do to the minds of traders, and to keep this in check, he hired a performance coach for the firm. You see, even the best people in the industry know how important it is to stay in the right mindset. And it is for this reason that Steve Cohen is reportedly worth $13 billion. Steve's life in finance has been nothing less than a roller coaster. He has seen the ups and he has also seen the downs. Apart from that, he has been active in philanthropy and has donated $1 million towards your various causes, and is also leading several non-profit foundations. Not quite involved in politics, but he has donated to several political campaigns. Steve, being an avid sports person, had bought an 8% stake in the baseball team New York Mets back in 2012, and by late 2020, he became the team's majority owner. Living the life not just in finance, but out of it too. Along with being a team owner, Steve is also an art collector. He started collecting art since 2000, and it is reported that his entire art collection is worth around $1 billion US. So here it is. This was the life and career of the legendary trader Steve Cohen. I hope that you actually learn a lot from this video, and if you feel that yes, you have, then do give it a like and also subscribe to the channel if you haven't already. See you in the next video.